If you have listened to me more than once or twice in the last 25 years that I have been covering personal finance, you will know that you've heard me focus on the importance of reducing debt. I'm very focused on the point of reducing debt. When you do it, how you do it, when you do it, all that, all the things. But my next guest has a different perspective on this idea, allowing individuals to take on even more debt as a way to alleviate the affordability crisis. I love me a good paradox or a contradictory view. And so we're going to get into that. The author is Marc Ah-Sen. He wrote a piece for The Walrus talking about this idea, bringing together the views of a number of different academics, and he joins us now to talk about it. Hello, Jean-Marc.
Hi, Bruce. Thanks for having me.
You are a writer, but you have experience working at a collection agency very early in your career. How did that experience inform your work on this article in particular?
Well, it's funny because the piece started out as being purely about my experience in debt collection and how it was a vile business and, predicated on the suffering of poor debtors. And it kind of evolved because my editors wanted, something beyond that, something that was more of the moment.
And of the moment, a lot of people are talking about it. Certainly in academic circles, this has been something that has been debated for generations, I would
Mhm.
say. You reference an American anthropologist named David Graeber. What does he bring to this conversation on debt?
So Graeber wrote a book called Debt, and it's studied all across the land. I should mention that Graeber was an anarchist, so that intellectual position is what influences his writing on the subject, which is
Mm.
that debt is inherently um, the product of those in power exerting control and dominance over those who do not. So that was his lens on debt, that it is an imbalance that never gets worked out between debtor and the lender.
And was this fundamental for your next academic, Joseph Heath? Was he someone who was engrossed in Graeber's work?
Um, so Heath, who takes a counter position, I think a lot of his, if I'm not mischaracterizing him, a lot of his ideas were pushing against Graeber's ideas. He actually thinks that with the emergence of limited liability, that our culture right now favors the debtor. Debtor rights are well protected and entrenched.
Hmm.
So Graeber's position was meant to moderate some of Graeber's writings, and it was actually Joseph Heath who said that this line that got pulled out a lot from the article, which is that we need to fight debt with more debt. I think that was my understanding of his idea that Canadians need to be taking on more debt in order to keep up with the inflation that is currently happening.
My blood pressure rose 2 times, 2x, when I read that sentence. In particular, he believing that banks have been too conservative on offering credit to borrowers. Can you talk a bit more about what he means? Does that mean like we should double the amount of room that people have on their credit cards? Should we authorize mortgages that don't require a 20% down payment without insurance? What does that mean?
We didn't get into specifics, but I think that Heath would probably agree with that. In part because so you have these runaway home prices, right? And you have people who maybe don't have the collateral necessarily to qualify for a loan. So kind of what Heath was saying was it'll all come out in the wash in a sense. So when we inherit money from our parents, right, who are probably propertied, he was saying that it will be able to pay off those loans. So if only banks, who are typically only concerned about credit exposure and overextending themselves, if they could take the long view, all would be well. I think that was what Heath was kind of saying. And he was talking about how young people, we tend to have a lot of, we don't have a lot of financial capital. So we have a lot of this ability to work. We have 30 years ahead of us to work and to also inherit money. If only the banks could take that into view, maybe we should be qualifying for larger loans to keep up with the cost of housing, the cost of cars.
One of the many perhaps unintended consequences of that would be a significant increase in the price of homes simply because demand would rise. Like you're
Right.
someone who's early in your career, you make 70 grand, you currently cannot afford a home that's $1 million. If you could, you're going to pay that amount for it. And then the person next to you is going to pay 1.1 million. The person next to you is going to pay 1.2 million.
Right.
The cap on that demand has been removed, which would lead to a
Yes.
significant increase in prices across the board. How do you factor that in?
That's very true. And I think that we, in our conversation, we're all also talking about government interventions. So what that might look like would depend on the government in power. But to curb those kind of inflationary things, you could control the amount of housing that is available, how much housing. I think the government has basically has an empty house tax that's in place. So I think that the argument being that policy can actually solve some of those problems. If we control how many homes you can own, whether they can be empty or not. Um, Mind you, these are measures that the Canadian government currently has in place that we could kind of fix this broken system.
Yeah, I mean, the big policy we need is a massive increase in the amount of housing supply we have in
Yes.
this country,
Yes.
and that has proven to be so difficult. Let's talk about it on the credit card front. The average outstanding balance on a credit card is about $3,500. People who have that balance are paying hundreds and hundreds and hundreds of dollars in interest
Yeah.
every single year. If they could borrow more, they might. And from my perspective, that would put them in a much worse position because they'd be paying so much more interest.
Yeah, I think I would agree with that personally. I think in this article we explained how credit interest rates work. It's basically to indemnify the credit card company from people who defaulting on their payments. That's why they're so extraordinarily high. Um, One solution though was, if our current situations, we can't be upwardly mobile in our jobs. One thing that Heath was talking about was the debt securitization market. That might be one avenue that we can free up some revenue from as a credit starved alternative, right? So if we can't go to the banks, maybe we could look into buying these debt securitized bonds.
And can you put or explain a bit more about what you mean by securitization?
Yeah, so debt securitization, I think, began in the 70s, is my understanding, in the States. And they were usually backed by government backed companies. But basically, there are companies who will pool together existing loans. They'll buy the loans, the debt from people like banks, and it's securitized into a tradable asset, like almost like a stock market. And this is an extra way for people to get revenue into their hands.
Yeah,
So I
this is
don't,
the this is exactly the product that got us into the financial crisis. The Big Short was a really great movie, but you're not doing very good things for my blood pressure here, Jean-Marc. My gosh,
yeah,
debt securitization being a bigger idea
yes.
versus a smaller idea, which I think would be more in line with my thinking. Do you think there's really an opportunity for more securitization of debt?
I don't know personally. This is part of the reason why I wrote this article, so I could
Yeah,
learn about and have these, an understanding of the financial instruments that I could apply in my own life.
yeah.
Heath was the one who pointed me to this idea because he actually said that with the subprime mortgage crisis, it wasn't so much the philosophy behind it that was wrong. It was actually trying to address a real need in society, which is that we don't have enough credit for people who are trying to live. And his view was that the problem with the subprime mortgages was you could basically insure these subprime mortgages that you didn't own, and that led to an arbitrarily created sense of derivatives. He's saying that with debt securitization, if we could kind of scale it back, we could actually keep the philosophy behind the subprime mortgages and use it in a way to introduce liquidity into credit starved Canadians.
Yeah, it makes me so nervous because one of the things, and this was much worse in the US than in
Mm.
Canada, was you could walk into a bank and get a mortgage to buy a house with no money down. There
Yes.
was very lax rules on income verification, and that led to this cascading series of harms that we're
Yeah.
still dealing with, what, 16 years after the fact.
Yeah, I don't think this is a necessarily. I don't think the idea is about laissez-faire, right? It's not about letting consumers do whatever they want. I think that, based on my talk with Heath, it did seem we need checks and balances. But if the banks are too risk averse to give these loans and people don't want to be, renting for the rest of their lives, this we might need to adjust the policy to allow more revenue to flow out to people who wouldn't necessarily qualify for mortgages.
Having covered that, I mean, you did tons of work on it. You had to put it into a piece, editors edited it. What is your, if you were to park your writer brain aside, what is your assessment of this theory that more debt will help the affordability crisis? Did you buy in to Joseph Heath's hypothesis?
I'm probably the most risk averse person that I know. So I don't the idea of taking on more debt does not appeal to me at all. I think that I'm more in line with what Graeber was saying, is that we might need more government intervention about what could be allowed in this country in terms of home ownership, for example, or like what you brought up earlier about enlarging the supply of houses. Like those are things that I think are easier to tinker with than
Yeah.
to just kind of wholesale let people take on more debt. But I think I would be mischaracterizing him if I said that he just wants to give money out. That's not the case at all. He just thinks that the current policy is not serving the needs of Canadians.
Woo! Well, I love that we had this conversation. I don't think I'd be signing up for that program myself, but I think it's worth us that we talk about all different approaches as a way of helping Canadians live great lives, prosperous lives, the lives that we want. So thank you for taking the time to join us today to talk about your piece.
It's my pleasure. Thanks for having me.
Jean-Marc Ah-Sen is a writer. He wrote this piece in The Walrus with this, I think, controversial hypothesis that maybe allowing more debt to Canadians would help with the affordability crisis.